Hi, today is January 8th, 2026, and my name is Elliott Proctor. I'm the lead developer of EWAVES, which is the world's most advanced Elliott Wave analysis engine. If you'd like to learn about EWAVES, go to ewaves.com, and there's a plethora of information there about it. All right, let's move on to today's topic. Okay, what I really wanted to talk about today was the COVID crash. So how could you have foreseen what was going to happen in the stock market during the COVID epidemic, how you could have prepared for it, and how you could have succeeded in that market environment? Okay, so let's take a quick look here on Wikipedia. We have the timeline of the COVID-19 pandemic. And the most important information we have right here is that the first cases of COVID-19 occurred about mid-August 2019. So what we want to do is we'll pull up a chart of the S&P 500, look and zoom in kind of around this time, see what the market was doing, and see what EWAVES had to say about that time. All right, so this is not the actual EWAVES live interface. Of course, the EWAVES live interface looks like this in this screenshot here. And if you are a subscriber, you can obviously just click log in to access EWAVES Live. So what we have here, this is the EWAVES debug tool, okay? And this is a tool that I use in order to make improvements to the EWAVES engine. All right, so let's go ahead and load up that data. We want GSPC, open. All right, now this is the S&P 500 all the way up until today, January 8th. So what we want to do is let's select this region here. We can look at the bull market since 2009, and right around this area is where COVID began. So this was a very unpredictable time. Obviously, it looked like the market was moving higher. Then we made lows below this low, and that probably whipsawed a lot of people before going and breaking above this high. That's a very complicated thing to anticipate the market doing in real time. And as far as I know, hardly anyone can anticipate this kind of price action. Most people out there say they use a moving average. Obviously, that's just going to completely whipsawed. But using Elliott Wave analysis with EWAVES, I want to show you because it really does something cool during this time period. So what was EWAVES thinking at this time when COVID was first launched? So let's go ahead and zoom in right around this time here. The market was at about this level by 2019-08. So this is when the first instances of COVID had broken out. Now, before I even hit analyze and let EWAVES show you what it would have said at that time, let's do it ourselves, actually. So we know some Elliott Wave analysis. So we see the market has gone down 1, 2, 3. Oh, wait a moment. Wave 4 cannot enter the price territory of wave 1, which means this must be A, B, C. Okay? That means this is a counter trend move, which means the market needed to continue higher. Okay? And you don't have to wait for it to make that new high. In fact, if we went back a little bit further, like say we could go back into the very beginning of 2019, let's say back here, and even at this point, you already know this must be corrective, okay? Because this price right here in particular, 28.57, that already has taken out these highs as well, which means there's just no way you can count this as a 1-2, 1-2. So from an Elliott Wave point of view, this is when the rules kick in and say that is a corrective move. So you would expect this to be some kind of a zigzag, okay? And let's go ahead and run EWAVES and see what it says about that period. All right, well, this is very interesting because if you notice, we put a 3 here. We have an A, B, C decline, and then another A down here. Let's zoom out for a second. In fact, let's zoom out a couple times and see kind of the partial pattern that it's forming here. Okay, so you can see you got A, B, C, and it's not labeling this as a wave 4. It's labeling it as A of 4. So in other words, it's saying, I expect this correction to be a flat correction that's going to come. Now, how does it know that? Because after 3 waves down, you could put a purple 4 here and say, hey, that's a zigzag, it's done. But EWAVES is a statistical engine, and it knows quite a lot about Elliott waves, and it knows that wave 4 tends to be in proportion to wave 2 in both price and time. So since wave 2 here took quite a bit of time to unfold as well as covered quite a lot of price territory, it's expecting that wave 4 should cover a similar amount of price and time as wave 2. And if this was the end of wave 4 right here, then that would be a very small wave 4 relative to wave 2. Therefore, it said, okay, most likely the correction is not over, And the most probable type of correction that could continue is a flat. Now, there are other types of corrections that could continue from a zigzag starting point. Triangles are an example. Double zigzags are another example. Double threes are another example. But all of those have different probabilities of occurring in the fourth wave position. And the flat does have a slight statistical edge and is a little bit more often seen than triangles, and especially compared to double zigzags, and doubly especially, no pun intended, than double threes, which are extremely rare. Now, it really is kind of amazing, actually, just by putting the A of the flat here. It's really telling you we expect a flat. And most flats, the behavior is the market makes a new high above this high. So it's saying we're going to go above here. And then what's the most common thing after that? It's going to go down and take out this A of a flat. So it's expecting the market to go up, make a new high, and then down and make a new low. And more importantly, that new low is going to be the end of a 4, and then we're going to blast off in a 5 above this high. So just at this moment in time, just putting that A of a flat in here, it's already telling you we expect the market to go up, down, and then up again, which exactly matches the pattern that the market actually ended up doing in the future. This is fractal extrapolation, and it is much more advanced than anything you can do with momentum or moving averages or other forms of technical analysis. So let's go ahead and jump forward in time here. So let's say the market was just starting down here from these highs, right? So we just got this first initial move down. Let's see what EWAVES was saying. If you'll notice here, we pinpointed the high, that's B of the flat. So we got A of the flat done, B of the flat done. We're working 1, 2. So it's telling you, the big crash is about to really kick off here. We've got 1 and 2 of the crash. And of course, that is what happened after that. So again, if we zoom out, we're moving forward in time. We've got A of the flat. We've got B of the flat. We're starting a crash. So you just have an immense amount of context here. Most people were caught off guard during this collapse because this is a 30% move. It was a very, very big deal, very scary. A lot of people thought this was the beginning of a major bear market, which is warranted if you look at valuations alone, because valuations are more extreme, especially today, than they've been at any time in history, really, way beyond what we saw in the roaring 20s or in the dot-com mania or the real estate mania. However, price patterns, to me, work far better than any other metric. So at this point in time, you not only know, okay, we're going to continue down, we're going to break this low here, that's what this is forecasting, but then we're going to continue up. So indeed, if we kind of zoom in one more time down to show this low, and let's go ahead and hit analyze and see what EWAVES was saying at that point. Okay, and indeed, we put in the 4 there. So let's zoom out again, and now we have our big picture bull market here. We've got 1, flat 2, 3, flat 4. Okay, and we're moving up. And now it's saying, okay, we're in the 5th wave of this entire bull market from 2009, and that's what's been unfolding since that time. Now, I'm sure you're very interested in what's going to happen in this period and how these are labeled. And if you want to know that, of course, we have these labeled in real time. That's on ewaves.com. So if you just go in here, join us, log in, and you can see our live wave count on the S&P to see what we are anticipating next. But just imagine if you had this information then and you had this kind of fractal extrapolation available to you. It really gives you a tremendous amount of information that can be, I think, impossible to derive any other way other than using Elliott Wave analysis. And the really important thing about using Elliott Wave analysis is it takes you out of the realm of fundamental analysis, which can be very confusing. At this point here, if you had known COVID was going to occur, yes, of course, you might look like a genius selling your stocks here, but how would you know to buy them back when you made a new low below this AF level, before the A of the flat? Because most flats don't go much beyond the A of the flat level. In rare cases, they don't break it at all, such as in running flats, which we had here in Wave 2, where we didn't quite go below that level. But most of the time they terminate just slightly below it. So this was really a screaming buy right at this level here. And this is information you can only get with Elliott Wave analysis. Just knowing that there's a pandemic, yes, maybe that would tell you you could sell the market, which I think is a pure coincidence because there are many other pandemics in history that occurred at low points before the market went higher. So there really is no consistent pattern there. But even if you take that as a granted, it still isn't going to tell you when to buy and that this was going to be so brief. But this brief, sharp, intense, scary decline is just classic for the final move in a flat. That's expected. In fact, if you remember back here, this is 2011 when we had this sharp move down here, and this caused a lot of panic in the markets as well. So it was a very similar time to these. So these C of A flats are very, very emotional events, and yet they're always completely retraced and recovered by in the next ensuing wave. In this case by wave 3, in this case by wave 5. Okay? Well, that was the main thing I wanted to show you today. But what I'd like to also point out, just because there may have been some confusion with the debug tool, that the labelings in the debug tool are slightly different than they are on our live charts. Okay? And the reason for that is just because the debug tool uses some shorthands that make it easier for me, the developer, to quickly understand what's going on. I can do things like edit this wave count, things of that nature that would be more difficult to do in another format. As an example of one of the differences, here we have A, B, and then there would be a C here, a red C, before that AF, right? Now the C doesn't have to be written in here in the debug tool because it's implicit. If you have this A here, you know that that's C completed. But in the actual eWaves Live interface, we label things in a more traditional way. So for example, here we've got a C wave up. We've got 1, 2, 3, 4, 5 of C complete of 2 complete. So this is how Elliott waves are traditionally labeled. You get these vertical stacks when you complete multiple waves at different degrees. And the debug tool simply doesn't do that. It just says, okay, the smaller degrees that finished are implicit. And then another difference between the live tool and the debug tool is we use these smaller letters to indicate the type. So this is A of a flat, because in traditional Elliott wave notation, it usually just says A, B, C, and that can refer to either a zigzag or a flat. But we want to be really explicit in the debug tool. So when we say A and B, that always means a zigzag. When we say AF, BF, that refers to a flat. Triangles, like as you can see here, we've got A of a triangle, B of a triangle, C, D, and then again, E is implicit because we finished B. So A, triangle, B, and then finishing up B of the flat. So that's just how we label things in the debug tool, and hopefully that eliminates any confusion from the actual way that eWaves labels things live. Now, that said, the live labeling also does not have any ambiguity, and I want to show you why. Let's scroll down here on the Wave Finder tool. I highly recommend looking at these, and this really deserves a separate video to show you kind of how we use the Wave Finder, which is an Elliott Wave scanning tool, to look for live setups. But let me just finish this discussion about labeling real quick. Our Turbo Fifth flagged this setup in gold a while back. It was forming this nice triangle before bursting out into a fifth wave. And of course, if you checked out gold lately, you'll know it's gone much, much, much higher. So this triangle was really excellent as a forecasting tool. But notice here how this A is lowercase, okay? So instead of having the F or the T after it, in the live tool, we simply use lowercase when we want to indicate a triangle. Okay, and then we use uppercase like this when we want to indicate a zigzag or a flat. Okay, and we can get away with that because these can be disambiguated by their internals. So A of a zigzag is an impulse, 1, 2, 3, 4, 5. So we know that this is a impulsive A, which means that this is not a flat. It's a zigzag pattern. So we've got A, triangle, B, C. And just a little tidbit of Elliott wave knowledge there. Triangles are by far the most common expression of B of a zigzag. So that's another big clue. It's a zigzag right there. Whereas when you come across a flat pattern, then you simply have an ABC within A. And I don't think this chart has a flat that I can point out easily to you. There is one actually right here, but it's quite small and a little bit hard to see. Okay, now of course this entire ABC is a zigzag, but B itself is a running flat. And you can tell that because we've got ABC, ABC, 1, 2, 3, 4, 5, okay? We already know this is A of a flat because it's 3 waves. So in this way, we always know very early on using the eWaves charts whether a correction is a flat, a zigzag, or a triangle. Now, of course, there's no way to know for certain until it fully unfolds, but again, eWaves uses statistics to make the best guess as to how that correction is going to unfold. Well, that's all for today. I hope to see you guys over at ewaves.com. Come check it out.